You know, there's a revolution happening right now, but it's not one you'll see on the nightly news. It's a quiet takeover that's completely rewriting the rules of the global economy. We're talking about artificial intelligence and how it's seizing control of global finance.
Just let that sink in for a second. That massive, constant flow of money that powers pretty much everything, well, the decisions about where it goes are being handed over from human traders to, well, to machines. And this isn't some far-off future. This is happening right now.
And to really get a sense of the scale we're talking about, look at this number. That's over $7.5 trillion, traded every single day. It's a number so big it's almost meaningless, right? But this is the playground where AI has become the top dog.
So who exactly are these new players calling the shots? Forget the old image of traders in colorful jackets screaming on a stock exchange floor. The new masters of the market are lines of code. They're super complex algorithms. They are the robo-traders.
Okay, so it all started with a pretty simple idea: algorithmic trading. At its most basic, it's just a computer following a strict set of rules. You know, if this stock hits this price, sell. Or if that economic indicator goes up, buy. The big deal, though, is that the computer can do this thousands of times a second, way faster than any human possibly could.
But just following a simple checklist? That was only the beginning. This is where it gets really interesting. With machine learning, these systems don't just follow the rules. They start to learn. They churn through mountains of past data, spotting tiny patterns we would never see, and they actually adapt their own strategies, all by themselves. Which brings us to the king of the jungle, high-frequency trading, or HFT. This is what you get when you combine that self-learning AI with absolutely terrifying speed. We're talking about HFT firms using these smart algorithms to fire off millions of trades in the time it takes you to blink, making money off tiny price differences that exist for just a millisecond.
So how on earth does an AI predict what the market's going to do next? Well, for one, it's not just staring at the same old stock charts. It's looking at basically everything.
I mean, think about this. A modern financial AI is reading every single news story, every corporate report, every economic indicator as it's released. It's analyzing the mood of millions of tweets to gauge public sentiment. It's even looking at satellite photos to, say, count the number of cars in Walmart parking lots to predict their earnings before the company ever announces them. It's a whole other level of analysis.
And it does all of that pretty much instantly.
Maybe this is the best way to wrap your head around it. Imagine a person who has read every book, every newspaper, and every tweet ever written, and they can process all of that information at once to make a decision. That's what a human trader is up against now. It's a superhuman opponent.
So naturally, this kind of power has kicked off an insane, high-stakes arms race. In today's world of finance, having the smartest, fastest AI isn't just a nice little advantage anymore. For the biggest firms, it's about pure survival.
In one corner, you've got the giants, the huge Wall Street banks who are pouring billions into building their own secret in-house AI trading systems. And in the other corner, you have these super specialized hedge funds and quant firms. These are the data nerds who live and breathe this stuff, using incredibly complex math to find tiny little glitches in the market they can exploit for profit.
And if you're wondering why a human can't compete in this race, just look at this. The absolute fastest a human can react to something they see is about a quarter of a second. A trading AI can react in 5 microseconds. That's 50,000 times faster. It's not a fair fight. It's not a fight at all.
But here's the catch. When you have this much power and this much speed, you also have an incredible amount of risk. We've basically built these things to operate faster than we can think, and then we've handed them the keys to the entire global economy. It's the one question that probably keeps financial regulators tossing and turning at night. Because when these systems break, they break faster than any human could ever hope to hit the brakes. And look, this isn't just some scary theory. It's already happened. Back in 2010, we had the flash crash. In the span of just a few minutes, a couple of competing algorithms basically got into a fight, creating a feedback loop that sent the market into an absolute nosedive. Almost $1 trillion in value vanished. Poof, before most people even knew what was going on. Now it bounced back, but it was a terrifying wake-up call.
So the risks are pretty clear. You can have these instant flash crashes. You can get these runaway feedback loops where algorithms just start feeding on each other's panic. And honestly, with so much trading happening inside these black boxes that no one truly understands, and with less direct human oversight every day, the whole system just becomes more fragile.
But even with all those dangers, this train isn't slowing down. Not at all. In fact, it's speeding up, heading towards a future that many people think is inevitable, one where finance is almost completely automated.
And you can kind of see the path from here to there, right? It starts with AI portfolio managers handling our 401ks. Then you get entire hedge funds that are completely run by an AI, no human managers at all. From there, the basic plumbing of the market gets fully automated, until you reach this theoretical endpoint, a global financial market that basically runs itself, with almost no humans in the loop.
And that leaves us with a pretty wild thought. We're in the middle of building this incredibly powerful, super fast, super intelligent system that already sits at the heart of our world. So the question really isn't if AI is going to run the markets anymore. The real question is, what does it mean for the rest of us when it does?